The U.S. dollar is a little changed and also mixed in early U.S. trading ahead of the U.S. jobs report, which will take place at 8:30 a.m. Just as a reminder, that data is expected to show non-farm payroll rose 110,000 versus 139,000 last month. The big surprise with it is the ADP employment estimate for the month came in at minus 33,000. So we'll see which employment report is what the U.S. BLS report does in relation to that ADP report at 8:30 a.m. The unemployment rate is expected to tick up to 4.3%. Average hourly earnings are expected to rise by 0.3% and 3.9% year on year. Also at 8:30, we all have the initial jobs claims and U.S. and Canada trade data will also be released at that time. So lots going on ahead of the 4th of July holiday tomorrow. U.S. bond and stock markets will close early today. The bond market at 2 p.m., the stock market's at 1 p.m. So, and we have the big, beautiful bill, I guess, which is going to be voted on today, along with trade surprises that could be announced today as well. So all that is on the table today. We'll talk about the technicals that are driving the major currency pairs ahead of that jobs report. So let's get started. Looking at the euro versus US dollar on the hourly chart yesterday, the market fell off from the high price that we saw on, well, I guess that's Tuesday's trade. That high price, by the way, was the highest level for the euro versus US dollar going all the way back to this period right here, which is in, what is that, September of 2021. It's also in between technical levels that I have here marked off at this daily chart. These highs right here came in around the 119.09 level. That would be the next target on the top side for the euro on further upside momentum, breaking above the high prices. Down here, we have swing levels in play between the 116.63 and 116.91 level. Level corresponds with this floor right here. Then we broke through the floor and used that level as a ceiling here before moving to the downside. In trading this week or last week, the price moved above that level, and we are staying away from it. We're kind of right in the middle of these two extremes right through here, and those are going to be the bookends for traders today on any sort of weakness or strength in the U.S. jobs report. And that would be the targets on the upside and downside. This is at 116.63 level, the 91 level. It's also just below the rising 200-hour moving average, so that will be in play. Also in play would be the 100-hour moving average in this swing level right through here. Break below the 100-hour moving average, and I think it's safe to say the bias is more to the downside with the 200 and this swing area down here off the daily chart. On the top side, break above the high, and we'll start to look toward that 119 level that I outlined off the daily chart. Let's take a look at the dollar versus yen next. Now I'll focus on the hourly chart for this currency pair, and you can see in trading yesterday, the price did extend above the 100-hour moving average. We traded above and below for a while with a big spike to the down or tumble to the downside and then rotation back up. But we did stay below that 100-hour moving average on this rebound right through here, keeping the bears in control. We pushed down lower into the close below this swing level, and in early Asian trading, we continued that move to the downside toward the low prices that we saw here in trading yesterday. Before bouncing back to the upside. As you can see, the 100-hour moving average is trying to hold resistance at 143.91. We're currently trading at 143.86, just below that level. We break above the 100-hour moving average because of let's say a stronger than expected number. Then we'll look toward our high prices right through here, and then the broken 61.8 at 144.36 is the next key targets, followed by the 200-hour moving average at 144.58. Conversely, probably a weaker data, and we should see yields move lower, and also the dollar yen move lower. Breaking below 143.64 would be the key level to watch for. Note that in trading here today on this corrective move off of the 100-hour moving average, we did find support against the low of that swing area at 143.64. So be aware of that level as a sort of a barometer for more bearish below. Hold it, and we're still 100-hour moving average, and that level is still forming the trading range in the short term for the dollar versus yen. Finally, let's take a look at the pound versus US dollar. And in trading this week, we did move to a new multi-year high going back to the weekly chart. That's high price that we saw in trading this week took the price to the highest level going back to, well, October of 2021. We also moved above the 50% midpoint of the range since the 2014 high to the 2022 low. That midpoint comes in at 1.3768. And if I go back to the hourly chart, you can see the high price moved to 1.3787. So we moved about 20 pips above that level. Here's that 68, 69 level right through here, which broken in trading last week. Just barely up to the 69.7 level. So 68, 69 is still a key level on the top side. If this price is going to go higher, that it is $1 lower, we're going to need to move away from what is the 200-hour moving average. That's a green line right here. Get above this swing area right through here at 136.82, and then start to look toward the 100-hour moving average. That's a green line, or the blue line in this chart. That level comes in at 1.37038. Conversely, if the dollar gets stronger, the pound versus US dollar moves to the downside, we're going to need to get back below the 38.2% retracement of the move up from the June low to the high price that we saw at the end of June. That level comes in at 1.3628, and also below this swing area right through here, where we had a number of different highs forming this ceiling through here. Got a little messy here as the market tried to figure out what it wanted to do. It looked like it was going to stay below that level and move lower, but it didn't. Snap back higher, and that's what caused this rally to the upside. So getting back below this area right through here and staying below that level. We did get below it in trading yesterday off of that political upheaval in the UK. Get below 136.15.8, and we open the door for the move down toward the 50%, and maybe take another look back below that level if that momentum continues. That's a stronger dollar in that directional bias. So watching the moving averages, watching the 38.2 swing area, 50% retracement in the pound versus US dollar. So that's my look at the three major currency pairs going into this key employment data. My name is Greg Mikulowski. Good fortune to your trading. Bye-bye now.